All right, future millionaires, welcome back to my channel. It's your girl, Ellie, aka Ellie Talks Money. I'm super excited to be bringing y'all another video, and today I want to talk to you guys about paying yourself as an entrepreneur. This is a topic that's really important to me and as well to, should be important to you as a business owner, because a big part of why we start our businesses is to give ourselves a raise, to pay ourselves what we deserve versus necessarily what our job pays us. And so the way to do that is to understand how to pay yourself the right way. And that's what I'm going to go over with you today. So you know the drill. Grab a notebook, grab a pen, and let's get into these gems. All right.
Ellie talks money to create the better days. Business, money, life, the Ellie way.
All right, y'all, welcome back into the video. So if you haven't already, make sure you subscribe to my channel, like this video, and turn on your notifications so you get, a little bell every time I post. So let's dive into paying yourself. All right, so I'm going to break down how to do this with different entities. So the first key here is that if you are currently an LLC, there's a specific way that you would pay yourself, and that is through what is called an owner's draw or an owner's withdrawal, okay? And so what that means is you paying yourself from your business is essentially just you transferring business income over to you personally, okay? Now, here's the way to manage this. I do not want you guys to just transfer a couple $100s every day or every time you feel like treating yourself to, nails or something. You do have to make sure that you set up how much you're going to pay yourself through owner's draw, and then as well, how often you are going to pay yourself this, okay? So the percentage I usually work off of and also have my clients work off of is about 20 to 30% is how much you can look at paying yourself from your LLC. So if you're making, what's an easy number, $10,000 a month in your business, then you may consider setting aside 20 to 30% to pay yourself or to draw for yourself to cover your personal expenses. Specifically, if you are self-employed and you have no other form of income, right? Now, at the very beginning of your business, maybe you still have a job or maybe you have savings. I would honestly recommend not starting any owner's draws or paying yourself at all and just reinvesting all that money back into your business. That's what's really going to help make sure you stay ahead as well as stay afloat. Now let's look at how we can track this. So again, the way that you can pay yourself is to transfer the money from your business account to personal, or to write a check from your business account to personal. But you do want to make sure that you document it in QuickBooks or on a spreadsheet with the date and the amount that you took the owner's draw. And this is why I recommend setting up yours to be twice a month or once a month. That way you always know on the 15th and the 30th, or on the 1st and the 15th of every month, you do an owner's draw of $1,500 or $2,000. This is going to make your life so much easier when it comes to preparing for your taxes. And if you have a bookkeeper, it's going to make their life so much easier as well. Okay. So again, this is not a tax deduction, you paying yourself. So that brings me into the next part of this video, and that is being an SCorp. Okay. So how paying yourself through owner's withdrawal is not a tax deduction. Paying yourself as an SCorp, you actually are able to deduct the cost of employee taxes. And that is because you are now an employee of your business. So you have a W-2 and your business pays you through direct deposit. I'll actually say it's pretty cool when your direct deposit comes into your account and it says the name of your company. It's like, wow, I'm really doing this. So that is how you would conduct this. Now let's go into the setup, right? So in order to become an SCorp, it's essentially you're still an LLC, but you have elected to be taxed as an SCorp. So it's called an SCorp election, and you make it by March 15th of every year, okay? So when you make this election now, you're paying yourself from your business, and you would set this up through QuickBooks has a payroll option. You can use ADP as well, which most of you guys are probably familiar with ADP. Almost every job uses it. You can also use Gusto, which is also great, especially for self-employed businesses. Now, when you start this, you essentially want to make sure that you are paying yourself a fair market rate. So at this point, you're not going to look at 20% of what your business makes, right? Because if your business starts making a lot, well, that could be a lot of money. I know for myself, I pay myself probably 5% or 10% of what my business actually makes on a monthly and yearly basis. So you more so want to look at what is the market rate for this role. So if you are titling yourself as the CEO of this company, if you're titling yourself as director of operations or whatever it is, what is the market rate that that position makes in your city, in your state, and considering your years of experience? So that might mean $100,000. That might mean $50,000, just depending on what makes the most sense for how much profit and revenue your business is generating. As well, before you consider electing to be taxed as an SCorp, you want to make sure that your business is making about $40,000 to $50,000 a year in profit. That's when it really becomes beneficial to change over to an SCorp, because you start saving more in taxes, okay? So the third tip I want to give you all in this video is to definitely make sure you hire an accountant, a CPA, a professional. Even if you just get a consultation, I'm giving, all the good advice based off of my own experience, but even I have a professional that helps me with paying myself, my taxes, my accounting, and etc. And as a business owner, we want to make sure these businesses last, right? You want to make sure that you have this business for the long term, which means making sure you have these checks and balances in place so that someone is helping you to set this up, okay? So you can do that through QuickBooks. They do have, CPAs that can help you there. And as well, looking for CPAs and accountants in your area, either through Instagram or online. And sometimes having them do these tasks for you is a one-time fee. Okay. All right, y'all. So bonus pro tip I want to give you, and that is when you do pay yourself through W-2 and with your SCorp, this can actually be really beneficial for you qualifying for things like a house, especially in your business name. So when you are going to apply for a mortgage or a car, things of that nature, it's always good to show that your business is your employer. And the way that you can really prove that is by having your W-2s. So the reason why this is better than showing yourself as necessarily self-employed is when you just give your general LLC information and bank statements, they're going to factor in how much it's making, but they're also going to factor in expenses and just overestimate, which is why a lot of the times business owners get approved for less. But when you're an SCorp and you show that your business is the employer, then you're able to give your W-2, which they're going to look at as straight income, and the statements from your business to help you get approved for more. So, I always got the gems. So I want you guys to comment below, how much do you want to pay yourself as a business owner? How much are you making now, and how much do you want to be making? Because all of that is really possible by starting your business and understanding this concept of how to pay yourself. All right, so I will see y'all in the next video.